The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the podcast on Tuesday, the 29th of December 2020. On the podcast today, Agam Jain, CEO of Vector Capital, that's VCAP, explains on their first day on AIM how their business model caters to a growing real estate market overlooked by traditional lenders. Also on the podcast, Glen Goodman, former ITV News Business correspondent and now the author of The Crypto Trader, covers this week's news related to Bitcoin, Ripple and crypto. Plus, Alan Green, CEO of Brand Communications, talks about Orphan, Blue Prism and Power Metals. And as always, at the end of the podcast, I have two lists for you. The top 5 most followed companies on Vox Markets in the last 24 hours and the top 5 most liked RNSs too. I'll also look at the most read RNSs. By the way, you can see both these lists at voxmarkets.co.uk with lots of other content. Check it out, and our COVID-19 index is there. Biggest rise of the day is 4D Pharma, up 11% to 133. Biggest faller is N4 Pharma, down 6.9% to 8.1 pence. Check that out at voxmarkets.co.uk.
Vox Markets is an online community of investors that runs a free mobile and desktop platform that allows you to track news and updates about any UK-listed company, offering RNS push notifications, detailed charts, pricing data, and much more. Find out more at voxmarkets.co.uk/app.
And joining me on the podcast right now is Agam Jain, CEO of Vector Capital. VCAP is the ticker. Again, thanks for joining me.
Right, thank you for inviting me, Justin.
Yeah, big day for you. First day of dealings on AIM, and we'll discuss the details of why you're doing it and what you're hoping to achieve. But before we do that, again, for people obviously not familiar because you're just brand new, just give us a summary as to what the business is about, please.
Okay, so Vector Capital then provides finance to a niche segment in the market, which are mainly property developers. So these are people that would buy properties, typically office blocks, dilapidated large residential properties, and even other types of commercial properties, with the main view of converting them to flats.
I see.
So they would use us for the period of buying the property and doing the conversion works. And when that is done, then they can refinance with traditional lenders like high street banks, etc. But for that initial period of the first 1 or 2 years when they need to do the work, that's when they come to Vector.
Understand. So why now? Why are you listing on AIM, and specifically why now, this period?
Okay, so the main lenders, i.e. the banks, have vacated this space over the last few years. As a result, the demand that we're facing is quite extraordinary, and our own organic sort of resources of plowing back profits from previous years just isn't sufficient, and we really needed to raise further capital, and that's the reason for listing.
Yeah, absolutely. So you've raised, is it 3 million, I think, and what are you going to be using it for then, again?
Right, the way our model works is that all 3 million will go straight into new lending. Mm-hmm. So with that money will be used to finance further construction and development of residential property. But against that, we also have bank facilities, debt facilities that allow us then to draw down funds against that. So then we can then replow the initial amount of capital back into further new lending. It has a multiplier effect of, I would say, about 3 to 1.
I understand. And I say, obviously, you're listing on AIM to raise capital to grow faster. And so looking forward, maybe next 12 months, what are you hoping to achieve, operationally?
Operationally, our main aim is to increase the amount of transactions that we can do and assist more developers to build more property. And the main function is to try and increase the loan book size.
Yeah, and just going back to that, you said, talk about the property market, and banks have stepped out of this area. And is this a recent thing, or has it been happening gradually? What's happening there?
It's been happening over a period of time. and it's not unnatural. You know, the banks require a lot of sort of understanding of the market, and you can't really do that at branch level. The branches are shutting. They don't have the type of people that will be able to talk to businesses that want to do this, and it's so it's being left for specialist players like ourselves.
I understand. Okay, well, listen, I wish you a happy first day of dealing. Hopefully we speak again. But every day on the podcast, again, what I do is I highlight the top 5 most followed companies on the Vox Markets platform. To get on that most followed list, of course, people have to a follow button. So people listening right now, like the sound of what you're talking about and what you're doing, the sector you're in. Give them 3 reasons, if you could, why they should hit that follow button and add you to their watch list, please.
Okay, look, first thing I'd say is that, you know, the economy is going through a big period of gloom and doom, and we're one of the sort of segments in the market that are still showing some steady growth. So that's probably a big reason that, you know, we're one of the shining stars in you know, that you can expect. We've got a track record of paying dividends, and going forward, you know, we've got a very progressive dividend policy. All of the money that we get it goes straight back into growing the business, and we've got a very long record of success. So we're not a startup. We're a business here that's come to scale up and show good returns to investors.
Excellent stuff. Well, it's good to have you on, and like I said, first day of dealings, and hopefully we'll catch up again in the not too distant future. Thanks very much again.
Right, thank you, Justin. Thank you.
The Vox Markets Podcast with Justin Waite.
And joining me on the podcast right now is Glen Goodman. He's the dirty trader, the crypto trader, sorry, not the dirty trader. Sorry, I just tend to slip into that whenever I talk to traders. You know, they're very dirty.
You're forgiven.
They have no loyalty to company stock or anything, just it's all about their pocket.
Loyalty.
The loyalty to the coin.
Loyalty is for mugs, Justin.
Well, you're right, actually. To a certain extent, yes. I use the wrong term there. It's not loyalty. It's more about, I like investing in stories, that are in big trends, good trends, that are evolving in a positive manner. Like,
Bitcoin.
But you jump in, you jump in and out. You wear your pants when it drops by that 2% and then sell.
I sell a little more often than I should, probably, but having said that, I held all the way from, what is it, $10,000 all the way up to $20-something thousand. You should give me some credit for that.
Well, that's more of an investor, isn't it? That's good, isn't it? How did it feel? Did it make you feel good?
Yeah, but that's what I generally am. I'm not a day trader.
You're a dirty day trader. Dirty Glen. You should call it Dirty Glen. Do you know that Dirty Glen? Yeah, he always comes on the podcast, Dirty Glen. But it's on a tear. I don't know how many weeks ago it was, but I think it was about 5 weeks ago when the first breakout in Bitcoin, and we both looked at the chart and said, do you know what? This on a monthly, a weekly, and daily looks very good. And when you look on a monthly and weekly, and the trend is good, then there's no reason, even though it's volatility, you know, it's quite volatile, Bitcoin for a big market cap, even though I don't understand how you value that really. It seemed like no reason to sell on dips. It almost add on dips, because that trend, it's like for even now, if you look at the
I'm still holding. Even now.
Are you still holding? That's good. Look at that. Wow, the monthly trend is phenomenal. It's never had 3 big up days like that, big up months, I suppose, like that, ever. And people say, okay, it's time to sell next, it's too hot. But in fact, do you know what? I'm going to talk about another stock here. It's gone on a tear recently. It's called Ilika, solid-state batteries investment I made. And I got my mates from the weekend podcast. In fact, Pete is always looking at valuations, which is good. It's always good to look at valuations of the company. But I said sometimes you just got to throw the valuation at the window, because when you're in a very hot trend, like solid-state batteries, and the entire world, governments around the world are saying it's time for electrification, we're quitting petrol, diesel. I've never known a trend so strong as that ever. Every government pretty much around the world backing it. And it's time to say, don't look at the market cap so much, because a lot of private investors don't even look at valuations, they look at share prices, that's it. And when the trend is like this, it goes nuts. It's also on the OTC market in America, and I looked at peers of this company, and the nearest peer it's got is in America. It's called QuantumScape. Now, this company in the UK is valued at, it's now valued, it's doubled. Since I talked about it about a few days back, it's more than doubled. It's now valued at 350 million market cap, which is big, considering there's very little revenue. QuantumScape in America, okay, Bill Gates has backed that, solid-state technology, similar development path to Ilika. And in fact, the CEO said, they said QuantumScape not that further advanced than this. QuantumScape are valued at 40 billion.
Wow.
So you realise the trend here is super hot. And when that happens, all you get is feverish buying all the way up. And you just need to ride it, you know. Don't worry about sort of valuations and all that stuff, because this is just trend of electrification. It's not going away for a decade at least. You know, it's going to be strong for at least till 2030. You know, when and it's not going to stop, is it? You know.
Well, perhaps the best example I can think of in terms of trying to ignore profits altogether and focus on the future, that sort of growth stock mentality, is Tesla.
Yeah,
I mean, if you focused on Tesla's profits, you would have sold it, you know, months and months ago, perhaps even not bought it at all, because obviously the number of cars it sells is still absolutely pitiful compared to Toyota or one of the big manufacturers. And now look at the price. The price is.
Glenn, you didn't look at my video. You don't subscribe to my videos, do you? At all.
I don't really watch trading videos.
It's not trade. Don't you call me a trader? How dare you?
I don't tend to watch those YouTube videos.
So
I make them myself. I make videos, but I don't.
What I did is I attempted to sort of look at the trend and see where the hot stocks are in comparisons. So I did a comparison with a solid-state battery maker in America, and I know American valuations are almost 5-10 times the UK listed companies. They can be even more than that. So then I said, well, the poster child of electrification is basically Tesla. And I said, 2017. You know, Elon Musk tweeted apparently their darkest days when they were still valued at 60 billion. The darkest days, he appealed to Tim Cook from Apple, saying, "I know you've got interest in the electrification and automotive field. Do you want to buy us? Because we're having problems with funding, all this stuff, and find it very hard. People haven't seen the future then." And then Tim Cook said, "No." And now, 3 years later, it's 10 times the valuation that it was at that time. It's flying high, and like I said, you're right there in that slide. I said. It's now, I think, bigger than the other 9 automotive companies put together, and they produce a fraction of the cars, and its PE ratio is way over 100, whereas the average for the automotive sector is around about 29. And so that was one comparison. And I said, okay, let's look at a UK version to compare with Ilika, for example. Ceres Power, which is a fuel technology company, they turned over 19 million in revenue, lost 10 million, and valued at 2 billion. So you can see, Ilika is still, on hype-wise, way undervalued from these companies. So I said, don't look, even though they're not turning over, they're grant-funded pretty much at the moment. They've got, partnerships with Honda, with Jaguar Land Rover and McLaren. So they're in there, they're doing this. And I said, when things are this hot, you just got to ride it and ignore valuation to a certain extent. Just go with the trend,
Exactly, because otherwise you lose out on all of that price gain. I mean, Tesla has gone up from... let's have a look. Right, in
$80
in June, it was priced at $200, and now it's at $660. And the price earnings ratio currently is 650. Whereas a price earnings ratio, as you say, for a sort of bog standard motor manufacturer might be 10 or 20. 20 used to be considered a really racy price earnings valuation. I guess some people still consider it racy, but when you compare it to some of the tech stocks, I mean, for a company of that size to have a price earnings ratio of 650 it seems almost insane, but Nasdaq's website gives estimates for the future, and they're saying that 2022, 2 years' time, the price earnings ratio, if the price of the share stayed the same as it is now, the price earnings ratio would have gone down to 150. So the company is growing that fast that if you price in as Tesla's stock now is 5 to 10 years worth of profit. Of growth, then you get to a point within just a few years where the price earnings ratio starts to look quite normal again. But that's assuming that the price of the share doesn't rise at all from this point.
And do you know what I should have said, really, the catchy sort of phrase, I kept saying, the thing is, how do you value these companies? And the thing is, you can't value the future, because we can't see the future. And if we'd known back even in 2017, 2015 even, that the governments around the world were going to ban petrol diesel, would have thought, oh, I'm buying Tesla, because that was the poster child, and people did, of course, and they saw the future. But again, you can't. It's very hard to price in the future because, like I said, battery technology is the leader as far as alternative energy for cars and everything. It's hydrogen and all that, but that's nowhere near as advanced and nowhere near as much money pouring into it. So when you realise we're now at 4% penetration on hybrid electric vehicles, and it's going to get to hopefully 30% by 2030. That's phenomenal upside just for 30%. Now, when you get 70, 80% of the world on electric vehicles, that'd be, phenomenal amount of upscale. So it's hard to price in the future. So that's what you're doing, So it's So just go with the trend, like you say. And in fact, Bitcoin now, you're in. Are you? So when will you get out now, or will you buy some more? What's going to happen there?
I'm not going to buy any more, certainly. But I am. Hold on, I'm just going back to the
dips be
chart.
bought? Shouldn't is it now? The institutions.
Yeah, but there hasn't been much of a dip currently.
No, I know. Will
It's
there
a
be
very,
one? Do
very
you think?
small dip.
Do you think there'll be one?
Well, there will at some point because there always is. If you look at the history of Bitcoin, after massive rises like the one that we've just seen, you tend to get a decline of 30 to 40% at some point. So, it's a game of chicken, really. I'm staying in for the time being. But as I always do, I try and spot where the trend is starting to bend at the end. Mm-hmm. And this trend does not yet show any signs of bending. When it does, I'll probably get out, and I might make a mistake, because that's what happens when you see what you think is the end of a trend and you get out eventually. You're making a judgment call, and there's always the chance that it was a a feint by the some big investors who quickly sold a huge amount to try and push the price down. And then when it's down, they buy back in, and then the price goes to all new highs, and then you feel very stupid if you've sold. Now, that's always a risk, but there has to come a point where you sell. You don't just hold on for the rest of your life. So you've got to, at some point, lay your chips on the table and go, right, this is my decision. So at some point, yes, I will decide the trend is bending and I'm going to get out. But as I say, if you look at the chart, there are still absolutely no signs of it bending in any way. It's still going upwards in an increasingly sharp fashion. It's rising to the point where the chart is almost vertical when you look at it on most timescales now. So
let's look ahead to the future then. If it does,
so I
dip,
ain't getting out. Not
but
yet.
Listen now, that we know now that there's a certain level of institutional adoption that there wasn't previously, and if this dips. And we know the trend is strong. What you get there, and this is why people often sell, and they make a mistake of selling on a dip, is that dip often gets bought because people don't want to be left out. They're saying, Bitcoin will be 100,000 this time next year. So when a trend gets so strong in a stock sometimes, it goes way beyond where you could ever imagine it would go in, because the dips get bought because there's fear of missing out. And that has to be said. First of all, when you get first initial, sort of like if you go back to the original sort of rallies in Bitcoin, that 20,000 rally last time, or 19,000 rally, it was largely private investors, wasn't it? Yeah. And so when it started selling, a lot of them who made money started worrying and started selling, and there was no institutional support there at all. Supply was a bit looser then. Now the supply is a lot less looser, isn't it? There's a lot of big institutions just piling in, and the narrative is that, like you said, you mentioned last time we were on, another company even Tesla, wasn't it, was thinking of actually inquiring about storing any cash in Bitcoin. So it was like,
yes, that's right.
So that kind of adoption just leads to, it fuels speculation and the frenzy around buying. So will the dips get bought? That's the thing.
Well, here's my feel on it at the moment. I think that the retail traders, the ones who, as you say, drove the 2017 boom, the ordinary guys and gals out there. Why did I say guys and gals?
Don't do that impression. Just
no.
Guys and gals.
Always a popular one.
Inappropriate impression from Dirty Glen.
The ordinary people out there, I think they're getting in now, and I have a number of reasons for believing that.
PayPal.
First of all, the institutions, as you quite rightly say, were getting in towards the end of this year, but we had another big boost to the price over Christmas, 25th and the 26th of December. Yes, because Bitcoin, the crypto markets are painfully open even on Christmas Day, 24/7. And it's not institutions buying on Christmas Day and Boxing Day. That ain't happening. Those were ordinary people pushing the price up at that point in time. And if you look at Google Trends, for example, the Google Trends website, you will see that interest in Bitcoin, number of searches for the word Bitcoin has been rising, which again sort of pushes home that point that ordinary people are now buying. But also another indicator, if you like, might be my book, The Crypto Trader, which has started selling faster than it has at any time since it came out more than a year and a half ago. It's amazing. We said before, it's correlated to the rise in Bitcoin. And you'll find when people are reaching like crazy for Bitcoin, your book will, when the supply of Bitcoin is going down because people are buying and holding, the supply of your book will be going down because... Exactly. It does every time. When the price, next time we get a price correction, I'm sure I'll see the sales of my book dipping quite significantly, even though it's just a correction. But yeah, at the moment, they're booming. I got that #1 bestseller tag on my book yesterday. You know that one that Amazon do?
Yes.
#1 bestseller.
Yeah, that's good. That's good, isn't it? That's amazing, that.
Yeah, I mean, not #1 bestseller in the world out of all books, obviously, but #1 in a category. Amazon puts your book in categories. You don't get to choose your own categories.
Yeah, that's very good to be #1 on Amazon, any category. Even a category of your own. It's like, because if they'd label it that, no one's going to check the rest of the category. They're just going to buy the #1, aren't they?
Yeah, I was pleased. It went above the book. The book, if you'll excuse my language, Mindfuck. Have you come across that book? It's a book about the Cambridge Analytica
I'll have to bleep that out now, but I'm sure people understand
that was #2 in the same category.
You've given me an editing issue now, Glenn.
Beat it.
I've got to bleep that out now because this podcast is for, it's a family listen. People sit round by the fire of an evening, especially over Christmas time, and listen to the podcast.
You told me before I could swear on
I didn't say that. I said, no, it depends what... That's a Class A swear, that is. Class A drug swear.
Oh, no, I didn't realise. Oh, I'm so sorry.
Well,
no,
sorry.
Should we start the podcast again?
No, I'll just bleep it out. I find it, keep it clean, Glenn. Yeah, Dirty Glenn again. Dirty Glenn. You're living up to your moniker there, Glenn. Yeah.
Sorry.
Cool. Listen, quickly. In fact, we got to run over a little bit here, but I saw lots of stuff on Ripple. What's that? Yes. XRP, isn't it?
Yeah, XRP.
And I knew they've got into sort of legal issues. What's going on there? Because to explain what Ripple is first, isn't it linked with banks and all that stuff or institutions? What's going on there?
Well, basically, Ripple/XRP is actually, XRP is the name of the cryptocurrency. Ripple is the name of the company, or Ripple Labs, which develops XRP. Now, they are not, by many people in the crypto community, considered to be a proper cryptocurrency. Reason being that they are centralized in Ripple Labs. They don't have the kind of decentralized structure that Bitcoin does. Though Ripple do claim strongly that XRP, the coins themselves, work in a decentralized, structured way. But the fact remains that Ripple is now being sued by the SEC in America, the financial regulator, for basically acting as a security. What they're saying is that XRP is a security, a traditional security that should be traded on stock exchanges, that kind of. That's what they mean by a security. Whereas where Ripple are saying that XRP is not a security, it's just a cryptocurrency, it's just a token like Bitcoin, like Ethereum. But it isn't like those because it has this centralization. And that's what the SEC is focusing on. I've read all their complaints, and they do seem to have quite a lot of evidence. Ripple reckon it will be thrown out of court, but it's caused the price of XRP to crash very, very badly. And this is an interesting one, actually, because it gives you a good lesson in not listening to what the people say. I'm saying the people in inverted commas. You know, when you're on the internet and you're on forums and so on, and there are people or even friends of yours who go, "Oh, you've got to buy Ripple, buy XRP. It's the next big thing." I've had so many people write to me in recent months, people who've read my book, saying, "Oh, do you think I should?" I mean, I'm not allowed to give financial advice anyway, but some of them ask for it. They go, "Should I buy XRP? People keep talking about it. People keep saying XRP is the next big thing." And indeed, its price rocketed in November from nowhere. It just zoomed upwards. So it was no surprise that everybody was suddenly talking about it. But the fact is, people just talk rubbish. They're like, yeah, it's going to be huge. Yeah, the company's doing so well. And it's like, oh, suddenly the SEC are investigating them. So it turns out all those people who were saying it's going to do great were just talking absolute nonsense. They were talking out of their, oh no, I can't say the swear word, can I? I'm not allowed to swear. Out of their posteriors. It was rubbish. And what's more, now Coinbase, the world's most reputable trading exchange, has just announced that it's halting all trading of XRP. It's stopping. It's no more trading of XRP on Coinbase. That is a massive, massive thing for XRP. And of course, the price has fallen even further because Coinbase and other exchanges are now scared that if they carry on allowing XRP to be traded, that they could end up falling foul of the law. Because if the SRC wins its court case and XRP is declared to be a security, then trading exchanges like Coinbase that allow the trading of XRP will be in breach of the law. So they're taking the initiative here and deciding before that court case is even resolved, we're just delisting XRP.
Yeah.
It's a bad situation.
So
and a salutary lesson.
So that's not the kind of dip you want to buy, is it, really?
No. Well, personally, I am not buying it. I mean, you know what happens with these things. All it would take is for a tiny bit of good news now, like some other trading exchange, like, say, Binance, the world's biggest trading exchange, if it came out and announced, we're never stopping the trading of XRP. Don't worry about that. If it said something like that, I could quite easily imagine the price of XRP shooting up 50%, because 50% is only where a 50% rise would take it back to where it was yesterday. That's how much it's fallen in recent times. So a 50% rise, taking it back to Monday's prices, would not be out of the question if you just had a little bit of good news. I mean, I'm only spitballing here. That was a made-up thing about Binance, obviously. So I guess what I'm saying is, if you're a quick and dirty trader, and I'm not one of those, whatever you say I am, but if I was, then, there is potential there for a big bounces back upwards, and I might be looking at the upside as well as the downside. But as a longer-term investor, I'm not touching Ripple. Not touching it, mate. Wouldn't touch it with yours, as they say.
Yeah, thanks very much, then, yeah. Yeah, no, again, like I said, that trend is, even if you look at trend lines there, the trend is broken there, isn't it? And like I said, uncertain future means it won't resume trend. Unless there's a massive change in sentiment or in that position that these institutions have taken on it, and so don't buy the dips. Dirty traders may look for a bounce, but that's the way to lose money. I say catching falling knives, that is, and don't do that. There's no point. There's other opportunities. I always think there's other opportunities out there. I see a lot of people sort of try and do this. I see oil stocks getting hammered, because they're done badly in debt. And people say, well, this company was worth $1 billion last year, and now it's worth less than 100 million. I think, but it doesn't matter. It doesn't matter what it's worth like last year. The story's changed on the company. They're in debt. I've had quite a few people talk about companies that are indebted, massively good debt, and they've sunk. So don't ever invest in a stock that's got lots of debt, bigger than. In fact, one company, there's a couple of them, Thomas Cook, there was something else as well, where debt was bigger than the market cap, and they were making a loss. So they can't maintain that debt, can't chip away at it. Basically, they're slowly drowning. There's no way you can trade that. Fair enough, but if you're going to buy stock in that company, you've got to be happy with the fact that you may wake up, or you mustn't be shaken by the fact that you may wake up one day and RNS will come out and says, basically, we're in administration. That's it. Shares delisted. So that's the way. And that's, to me, that's too much risk. You can get plenty of reward without taking on board that much risk. There's plenty of risk in equities as it is. You don't need that kind of risk. And more importantly, it's a risk you can avoid. Sometimes, companies will take a knock and you won't see it coming. It'll come from left field somewhere. But if you can see there's a lot of risk, if you can see the risk, avoid it. That's the best thing to do.
Yeah, I mean, what you just referred to there, I talk about in the Crypto Trader, anchoring bias. You just referred to people saying, oh, but look how much higher the price was yesterday. That must mean, therefore, the price is a bargain today because it's lower. Anchoring bias is when people get attached to a certain price level that they've got used to. So if Ripple was trading up at, 50 cents for a while, people get used to that and they think of that as the, in inverted commas, normal price. 50 cents is the normal price. Therefore, because Ripple XRP is trading right now at 21 cents, it looks like a bargain when you compare it to 50 cents. But what people don't understand, the bias, the psychological anchoring bias, means that they think of 50 cents as normal, but that doesn't mean it is normal. It's not really normal. They just think it's normal because they got used to it. In actual fact, 21 cents, the price now, that's the normal price. That's the price that reflects all the information that is currently in the market about it. I would argue that that's a fair price, certainly fairer than 50 cents anyway.
Yeah, cool. Marvellous. Anything else, Glenn? What are you doing for New Year's Eve? Anything special? Trading?
Is anybody doing anything for New Year's Eve this year? I mean, what can we do? Just like stare at us. I can't think. What am I going to stare at? I had a variety of different screens in my mind. Like, which screen shall I stare at on New Year's Eve? The TV screen,
I don't do
computer
much
screen, my phone screen. So many choices, Justin.
I don't do much on New Year's Eve anyway. It's not really a lot different. I can do the same as I always normally do. Since I was 40, I didn't really go out anyway on New Year's Eve. Or even
I know. It's always disappointing, though. There was the New Year's Eve when Julie and Liz both snogged me one after the other. That was good.
Who's Julie and Liz?
Well, yeah, I mean, this is like 25, 30 years ago. It's a long time ago, but it sticks in my mind because it was when Julie and Liz
did your missus know that?
Snogged me. Well, I hadn't even met my missus yet, had I? I was like,
doesn't matter. I was
a teen. I was a crazy teen, Justin.
I'm not joking.
I was at a party. Julie came up and she just she didn't say anything. She just snogged me, and I was like, "This is great." Julie's snogging me, and her mate Liz was just standing there, and then she stopped snogging me, and then Liz just started snogging me. What can I tell you? It was crazy.
But it doesn't matter with wives and partners. They'll see that. Is that your most positive New Year's Eve memory? Is it, Glenn? You snogging two girls?
That's it. That's the only good thing that's ever happened to me on New Year's Eve.
But your wife, are you married?
I am, yeah.
What, I assume it's to a lady, is it?
It's to a lady, a lovely lady.
Well,
yes.
she will not be impressed that your most fondest memory of New Year's Eve is not with her. That's it. That's how women think. So I wouldn't share that memory with your wife. All right, just make up one more currently with your wife.
Luckily, my wife has no interest in investing, so she won't be listening to this podcast.
Yeah, good. Well, I say good. It's one less listener, but good for you. Marvellous, Glenn. Thanks for that. Have a happy New Year, and we'll speak next week.
Happy New Year.
The Vox Markets Podcast with Justin Waite.
And joining me on the podcast right now is Alan Green, CEO of Brand Communication. Joel.
Good morning, Just. Fully recovered after Christmas, 4 days off. Lovely. And with the lockdown, did
it's a long 4 days, isn't it? Do you know, market shut. I love the markets. It's a living, breathing beast, And someone said we put it in the cage for like 4 days and let it out. And I agree.
And it's burst free today. It's burst free of its shackles today, and it's leaping forward in anticipation of a 2021 unencumbered by the EU. Well, I say unencumbered by the EU. I mean, of course, we're going to be we'll be working with the EU because they're our biggest trading partner. But it's great for the markets. Brexit deal done, tariff-free trade with Europe. There are some details in there that are not so popular. The Erasmus scheme obviously is ending for students studying in Europe. But the quota for the British fishing fleet is up by 25% and will improve as time goes forward. And, of course, free movement too. So, I actually think Boris has come away with a really good deal. All in all, could have been better, but it's now done. Anything that isn't quite right can be revisited, as I've said on previous podcasts, and I'm just very optimistic going forward.
Yeah. I think we've got this, and of course, numbers are very high. NHS, hospital admissions higher than they were back in the spring, but I think what people are looking forward to, and any day right now, people thought it was going to be today, it was yesterday, and in fact, I've done a little poll on Twitter saying it's rumoured the AstraZeneca-Oxford vaccine could be given the green light by regulators in the UK this week. If so, it's seen as a game changer, as it's easier to mass vaccinate, 'cause it doesn't need super cold storage, supply chain. It's basically normal fridges. And so literally we can go from vaccinating a couple of 100,000 people a week to literally 1 million, probably more than that a week.
Exactly.
And so I think that'll... let's be honest, if you look at the figures, I looked at the figures, I looked it up about who are seen as clinically extremely vulnerable. It's about 2.5 million people of those. There's about 1 million NHS workers, about 1.4 million care workers. Those people, they could be done as 5 million people altogether. They could be done in 5 weeks. Pretty much, and then the first vaccination, and that gives them a certain level of protection anyway. So this is a real game changer. So 10 weeks, they'll be done. They're the people, the extremely vulnerable, who get admitted to hospital when they catch it, because it takes them down. So as long as those people are safe, NHS will not be locked down. The economy can open back up. And like I said, spring, and if we're vaccinating at this rate, 1 million per week, then even a bit more than that, then I think it'll be back to pretty much as normal, the new normal, pretty much. Or, at least we can open up the economy. And that's why I see sentiment for, if you look at the moment, sentiment for travel companies, leisure, hospitality, all that stuff, they're doing really well today, because I think the expectation this vaccine will get the green light either day. In fact, on my poll at the moment, Wednesday, tomorrow is winning. So 33% of people reckon tomorrow it'll get the green light. And if that does it, we'll have another rally. There's a Santa rally. It's fully on. And I was talking about this for a long time. So listen, we get the Brexit deal done, get coronavirus vaccination, the big vaccination passed, and it's nothing but a good run the stock market will have. And it's
I agree. Yeah. I agree completely, and I think also, we've got, in regard to this vaccine, I think Hancock was indicating they're aiming to get everyone over 50 vaccinated by the start of the spring, which is the next couple of months, which sounds
That's
as though
you, it's not you.
It is me. Yeah, it is. I'm over that level. So I will be one of those lucky people. But equally, the idea of having something that needs to be stored at minus 88 degrees centigrade injected into me doesn't appeal. So I would voluntarily wait for the AstraZeneca vaccine anyway.
That doesn't happen though. They have to. That's another thing. It has to be defrosted, and so the Pfizer and the Moderna ones, they're stored at minus 70, minus 80. Then you have to defrost it. So it's a complex chain, and I'm surprised that they are vaccinating still about close to, I think, about 100,000 people. In fact, I've got figures there, but I'm surprised considering how complex it is, how many people they're vaccinated. Fair play, but when the AstraZeneca one comes out, it's none of that. No defrosting. Every GP can store it. They don't have any of these special fridges, so literally they can do it in stadiums. They say stadiums full are going to be used, and all the big areas we can use. Race courses, they'll do it. There'll be hundreds of thousands of people getting vaccinated, per day. So that's good. That's a good thing. So
it is. It is.
Anyway, let's talk about stocks, Al. So what are you looking at?
Well, following on from that, I've got 4 companies to look at today. They're all in different areas, but following on from the vaccination process, Open Orphan is one of my picks for 2021. ORPH is the EPIC code, and of course, Open Orphan is a company that is a contract research organisation. The company owns Venn Life Sciences, which has offices in the UK and, of course, in the Netherlands. And Venn Life Sciences undertakes contract research with a number of tier 1, tier 2, and tier 3 pharmaceutical companies. Carol Friel, as has been on Vox podcast many times and has been interviewed all over, has driven this company forward. And when I say driven, I mean literally. He's invested huge amounts of money in through his own company and continues to drive the company forward. And he's promised all of the investors in the group that the company will make a profit in Q4, and they're on target to do that. And I think whereas a lot of the companies involved in COVID, some people may think now, with the AstraZeneca vaccine and the other vaccines out there, that a lot of the companies may have had their best days on the market. Open Orphan is so diverse in its offering. I think this company is just going to continue to grow. It's undertaking the human challenge trials. Of course, we heard in December that the MHRA had approved the Codagenix nasal COVID vaccine trial, which is taking place at the HVivo quarantine centre in Queen Mary's Hospital in London. On top of which, we heard during the past few months that new contract wins and with HVivo for the influenza challenge study contract. Venlife, I've already mentioned, has won a number of new contracts in December, 2 new contracts, and then an extension of a contract with a top tier pharmaceutical company. And the news just continues. It's just a relentless news machine, but it's so diverse in its activities, and it generates revenue from so many different areas. And I think I've made this comparison before, but I think it's well worth noting that one of the companies with which Open Orphan has worked is listed on the Nasdaq, and that company is Quotient. Now, Quotient are looking at a turnover for the year of some $30 million, and they have a market cap of some 400,000 to 500,000 sterling, so getting over $500 million. Now, Open Orphan, of course, is pushing over 100 million sterling now, but it's still really undervalued compared to this company. And Carol Friel says the company will deliver a profit in quarter 4. If it does that, then I believe the company will take the next step. They may also, the company, I think, if it's, I've said this before, if the company had was dual listed in the US as well, it would probably warrant a higher rating for its stock price, because pharmaceutical companies listed in the US on Nasdaq in particular, and tech companies too, do tend to see a higher rating. So. Given that backdrop, given that Carl expects to deliver a profit in quarter 4 for Open Orphan, I think 2021 is looking very bright for the company. And if it continues to win contracts at this rate, I believe the company will see a marked re-rating, certainly by the end of quarter 1, possibly early into quarter 2. But watch this space for Open Orphan in 2021.
Yeah, I like Kyle. I mean, in fact, when he came on the podcast, and I bought the stock, and just basically on his. I
hold the stock too.
I got it too early. The trouble is, one of the things, the scariness of the sell-off and all that thing, all that around it. I gotta say, I must have. I went to cash. I did the dash for cash, and one of the things casualties was Open Orphan, which I hadn't done it because Kyle he's a clever guy. And I was with him, even when he came on, when he first raised twice the market cap, at double the price with institutions as well. I thought, wow, he's a good salesman, Kyle. And that's part of the deal when you're CEO. You have to have a vision, but you have to sell it as well. And he can do that, And so that's one of the lessons I've learned there, I think, from this year, was if you've got a good guy at the helm who's got a vision, an achievable vision, and can sell it. It's a very valuable commodity to have, a very valuable sort of asset in a company. And I think I like him a lot. He's going to do very well.
Yeah, you also mentioned the pharma sell-off there, just I think with the likes of Avactis and Airgen and other companies, pushing forward COVID trialing and COVID vaccines and so on, we have seen a sharp sell-off after of course, the Pfizer vaccine was announced, and then subsequently Moderna and AstraZeneca vaccines. Big sell-off for these companies. But look at the Open Orphan share price; it was barely affected at all, simply because Orphan are working with the companies. They're providing contract research, so the ebb and flow of the fortunes of COVID-focused companies don't affect Open Orphan in the same way, and I think that's a really important consideration going forward. I don't think Open Orphan will give its investors a white-knuckle ride like some of the other pharmaceutical companies have, simply because it has that broad-based exposure. It's a contract research organization. It has a huge huge database that it sells, and it generates its revenues from so many different areas in the industry. It's got a unique position in that regard.
Do you know what? I like to look at the chart as well. We've gone past that, little spike now. It's come down, it's consolidating. There's a good trading range between 22.5 and 25. I think if the next few days or weeks, if it pops above 25, 26, it's going to go again then. So, it's cooled off a bit. That's good.
I think so. I think if it closes this year at above 25p, then we could see it punch through 30p in the first full trading week of 2021. So but very confident and very excited for the future of the company next year for sure.
Marvelous stuff. What's next, Al?
Okay, so moving now to technology, company called Blue Prism Group. We've of course spoken about Blue Prism before, and this is a company that again has a product offering that has really benefited from lockdown, simply because it provides RPA, robotic process automation. These companies are pretty much the inventors of robotic process automation, and to give you an idea of how this works, if you as a business applied for a CBILS loan earlier in the year, the process you were taken through would have been provided by a Blue Prism RPA process. Blue Prism provides services and automated process automation to companies across the world. In Waitrose, you've got in the UK, you've got Waitrose and Arla Foods, and a vast, broad, and diverse range of customers all over the world. In fact, their breakdown on November 17th, the company provided a trading update. The breakdown is 41% of the Americas, 47% the EMEA, and 12% APAC nations. So it's a truly global organization. And again, we talk about charts. I mean, this is a lovely chart. If you look at the sell-off in March, we've just seen a steady series of high lows since that point. Currently trading at just over £17 a share. And of course, this is up from when we last spoke about the company. The share price was £13 per share, and we've heard since then that the company's appointed a Bank of America as its second broker alongside Investec to improve liquidity and increase its investor reach. And indeed, John King, a former member of Bank of America, has joined Blue Prism as head of strategy and corporate finance going forward, and that's a really strong sign. Earlier in the year, of course, Jason Kingdon took over as CEO from Alistair Bathgate, who stepped down as co-founder. I mean, he's obviously retired, a multi-millionaire, and driven the company forward. But going back to the trading update again, the company said that it has delivered a very strong full-year performance. With average recurring revenues of 154 million, full-year bookings of 180 million, which represents 40% growth on last year. 60% of that revenue was secured during the second half, with 122 million of it being new business and upsell on existing customers. And that new business represents some 490 new customers. So this is huge growth for the company. And Jason Kingdon said with a statement that they'd seen a really strong acceleration in new business in the cloud, and he expected on the back of this performance that the company would hit cash break even in 2021. Now, trading on a pretty racy rating even now, but I think the revenue growth and the environment that we're now in, the company really has an offering that is absolutely perfect, given that companies are still facing lockdown restrictions going forward, and as COVID mutates and we see new mutations, it's going to be difficult for people to fully re-enter the workplace. So process automation is all about work as we go forward. And Blue Prism, I think, as a technology company, are just ideal. They are the founders of it. They are the innovators. They have a truly global footprint. And once they reach cash break even next year, I think we're going to see the valuation of the company increase further still.
Mm-hmm. Do you know what? Last time I tweeted about that company, I said I've been watching Prism for a while. It was in January this year. And I said, very hot area of robotics and AI. The hope is more than priced in, valued at 1.3 billion on 12 months revenue of 101 million, loss of 78 million. As CEO Alistair Bathgate exercised options yesterday from IPO at 78 pence, now priced at £15.59. Pip profit is 7.3 million.
Way to go! Way to go!
Wow!
Yeah. I mean, way to go! Yeah, the guys. Well, he's not retired. I think he's still very much involved and acting as a consultant with the company. But I mean, that's quite something, isn't it? That's a hell of a performance and a life-changing amount of money to take down from the company. But I still think they're just at the beginning of this particular curve. Process automation is where it's at, and with their cloud offering performing so strongly. But sky's the limit for 2021.
Yeah. Marvellous stuff. Anything else, Al?
Yep, a couple more for you. I just want to. I'm trying to sort of look at this at a diverse set of companies for 2021. I'm back now onto mining and resource, and looking at a company that has been an absolute powerhouse during 2020, and I think is on the cusp of some great things in 2021. And the reason is that that the company has 9 different projects around the world and is exposed to these projects again in very diverse ways, both as full owners and then as joint venture holders, or with options to earn in at a later date. This is, of course, Power Metal Resources, POW is the EPIC code. Shares currently trading at 2.6p, giving it a value of 23.5 million sterling. Has a range of projects. I'm not going to go into a huge amount of detail on each one because I think a lot of people are aware that, of course, we've spoken about the company in more detail in the past. It has a joint venture in Victoria, Australia. Of course, Victoria is plumb centre at the moment for gold mining activity and exploration, and of course that territory is very fertile in that we have the Fosterville gold mine, which is the most profitable gold mine in Australia, the Ballarat mine, and many other active mines in the region. The joint venture there with Red Rock Resources, Red Rock Australasia, and very fertile licensed territories across the region, developing fast. They have 2 projects in Botswana. They have the Kalahari Copperbelt project, which is a 50% owned project with Kavanga Resources, and also the Malopo Farms Complex project, which is a nickel, copper, platinum group metals prospect. They have a prospect in Cameroon, the Cobalt Blue project. Cobalt and nickel, obviously, very key minerals going forward for the new electric industry revolution. There is also a joint venture with Katoro Gold in Tanzania with the Haneti project. That's 35% owned. That's nickel and lithium. The Alamo Gold project in the USA, which is fast developing. There's an option to earn in up to 75%, and work is underway there. And then most recently this morning, we had an update on the Canada Silver Peak project, which recorded some what Paul Johnson has referred to as bonanza level grades of silver. The drilling team undertook some work at the Silver Peak project. This is, of course, in British Columbia. It's a former silver mine, Eureka silver mine, so they're prospecting around the region. And the samples have returned spectacular levels, 5,500 grams per ton in the Victoria vein, and that was reported this morning. So a very strong sort of potential sort of in that at the Silver Peak project. So these projects progress. The company is very well funded. It's raised over 1.3 million in warrant exercises since August last year, and Paul Johnson himself has invested an awful lot of his own money personally. Now owns 61.5 million shares in the company. That's through buying shares in the open market. And what I like about Paul Johnson is he puts his money where his mouth is, and he's got a mining company that offers a broad risk of assets, a broad spread of assets. Diverse risk, and they're all at different stages. And really, given where the valuation of the company is at the moment, any one of these projects comes off and is taken on to the next stage, that one project alone could dwarf the current market cap. And I think that's the exciting prospect within this company, and why I picked it out as having real potential for 2021.
It's 10 bags since April.
I know. 10 bags since April, but it's still only worth 23 million.
Yeah, wow.
So I think it's there for a reason. If you look at the news flow, I mean the news flow from Power Metal is just relentless. There's several announcements every day, or there were several announcements every day at one phase last year, and of course the first trading day after Christmas, and there's a big development in the Silver Peak project today, and I'm sure we're going to hear a lot more from Power Metal before the year's out in regard to developments from drilling campaigns in Botswana and developments in Australia and so on.
Lovely stuff. Al, thanks for that, fella. And any big plans for New Year's Eve? I know you're a party crazy dude.
Yeah, lockdown party. That'll be me, myself, and my good wife Annie will be sitting here probably I'm just looking over my rack of spirits here. We've, as you do before Christmas, you're in the supermarket and they've got a bottle of spirits at knockdown price, and there they are arrayed before me in the office here. So I dare say I'll be getting legless one way or another New Year's Eve, and then on we go into 2021.
Lovely.
How about yourself?
Yes, I'll join you. It's a similar kind of thing. But I've a couple of drinks, a bit of food. I prefer that, I know I'm not a teenager anymore. I do feel sorry for the teenagers who can't go out and party, or 20-year-olds, in lockdown. But I suppose it has to be done for the sake of NHS and all that stuff. But I never really was a fan of New Year's Eve. Overpriced, overhyped, and essentially now I prefer just sitting at home, eating and drinking with the missus, and that's about it. Falling into bed sometime. Normally these days, falling into bed way before 12 o'clock.
Yeah, it's all got a bit same old, the old Lang Syne stuff and the fireworks and everything, and I think for various reasons, a lot of people, including myself, will be very happy to see the back of this year. Although it's been a wonderful year in some ways. Obviously, we've had the COVID crisis, which has just rocked the world. But so I think
my advice to you, Al, is listen. Stocks wise, is get yourself a leisure, travel, or hospitality stock that's been battered down. Because judging by my wife's bookings of holidays for next year, it's going to go berserk. People want to get out of the house, want to travel. My play is, you probably know, is Escape Hunt. I mean, it's been hammered down because a lot of the sites have been locked, but they've got a digital play which has done phenomenally well. They've just launched a digital strategy which has done a phenomenal amount of business. And now they have two plays, so they can actually, even if locked down, they can still earn money. But when their sites open back up, I think it'll rally crazy. It's only worth, 12 million market cap. And I did a video of, it's 16 pence at the moment. I did a roadmap of them to £1 in the next 3 to 5 years. And the management are very clever, very sharp. But the fact that they've turned around the strategy, digital strategy. Listen, I don't know if you read that RNS, but have a listen to this digital strategy they did. This didn't exist pre-April, pretty much. But they now do, on their own sort of platform, the corporates. So a lot of corporate companies, who want to do parties or team building events, and they can't do them face to face. They've gone online. They're doing like these games and escape room games online. So in December alone, right, they did 6 digital propositions in the B2B market. They delivered 200 bookings, comprising of 1,000 corporate teams, 6,000 individuals. As testament to the scalability of the products, the largest attendance in a single game had 347 people, split between 57 teams playing the same game, all hosted by the company's in-house delivery team across 2 continents. So it's 250 people, 350 people in one game across 2 continents, and that comes with it very little upfront cost. It's not like opening a site where it costs £500,000 or somewhere and doesn't need lots of staff. All that one game, 350 people, was hosted by 5 people at the skate pump. That's all. So that upside, that's the blue sky opportunity there. That'll just grow because it'll take a while to get back to normal. But in the meantime, as this carries on, they're then opening up their sites as well, their physical sites, which they were expanding one site per month pretty much. But I see that as really big upside from 12 million. And they've got plenty of cash because they raised 4 million, which they've not used because of furlough. And the thing is, the disadvantage, the hardship being felt by corporate landlords in these big malls, shopping malls. They need people now in, and they've offered escape hunt. Escape hunt approached some of these big premium shopping malls beforehand, and they couldn't afford it. Now the landlords are coming back to escape and said, listen, we'll renegotiate. You basically have to pay us very little up front. We just need to get some of these places let, and so they're now getting better sites, physical sites, and they've got a digital strategy, which is very good. So keep an eye on that. I think it's going to do very well. But I just think anyway, if not that company, get yourself a hospitality, a leisure or travel stock, because I think 2021 will do very well. My wife has gone crazy booking holidays. So calm down. I said, you spend more on holidays this year, next year than the average national wage a person would get. So calm down. But I think it's going to go berserk. Once we can get out there and do stuff, I think that area will go berserk.
Well, I've noticed both British Airways and Ryanair are advertising like crazy. We were watching TV last night. It was just flight ads the whole time. Book ads now. Thousands of flights, all going to go between now and March, and they've got this huge sale. And I think the leisure and travel sector do offer some really good recovery opportunities. EasyJet and Ryanair, and just think if Thomas Cook was still around.
yeah, exactly. No, don't bring that on to that. You look at companies that's not swimming in debt. That's the thing. Debt is so debt.
Yeah, they're gone. Yeah. It's history. But if they survive to this long, who knows? Yeah. Anyway,
marvelous stuff. Chief, have a happy New Year. Speak in 2021. More positive 2021. Speak to you then. Cheers, buddy.
2021. All the best, mate. Cheers. Bye for now.
Okay, it's time for the top 5 most followed companies on Vox Markets in the last 24 hours. They are at 5. AFC Energy up 30% to 85.95. At 4, Abingdon Health down 4% to 93.5. At 3, Supply Atme Capital up 9.65% to 0.625. At 2, Ilika again up 26% to 252.5. Of course, the video of those recently. And at 1, Argo Blockchain Mining up 81.58% to 34.5 pence. All right, top 5 most liked, most viewed RNSs are as follows. At 5, Powerhouse Energy, that's dealing by PDMR. At 4, Greatland Gold, Havieron mining proposal approved for early works. At 3, Remote Monitor Systems, farm to farm update. At 2, Supply Atme Capital, Director PDMR shareholding. And at 1, Omega Diagnostics, update ABC 19 rapid test. That's it for the podcast. Thanks for listening. Muchos apreciados.
The Vox Markets Podcast with Justin Waite. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.